Hello students, welcome to EPG Pathshala. I am Ritesh Verma from Maharaja Agrasen College, University of Delhi. Today we are going to talk on module Cashbook, meaning, features, advantages, types and petty cashbook from paper accounting and financial analysis. Objectives: different types of cash books, that is simple cash book, two column cash book, three column cash book and petty cash book. Difference between a cash book and a cash account. Introduction: every business enterprises use the cash book to keep record of different cash receipts and payments that travel through a company in a particular period. An accountant records the cash book transactions chronologically as they occur within the debit or credit columns. Cash book is a book which consists of all the cash transactions. Cash book in general is considered as a book of original entry as well as final entry, as it serves twin role of a ledger as well as a journal. Cash book is the account which keeps track of all the cash transactions of the business, as cash book is a part of ledger. Cash book consists of cash account and bank account. Cash account is an asset account or real account, and thus an increase in cash or bank account is debited to the account, and any decrease in cash or bank account is credited to the account. Cash book always shows a debit balance. Features: a cash book has the following features. Only cash transactions are recorded in the cash book. It plays a twin role, as it is both a book of original entry, that is journal, as well as book of final entry. All cash transactions are primarily recorded in it as soon as they take place. That is why it is considered as a book of original entry. On the other hand, the cash aspect of all cash transactions is finally recorded in the cash book. A cash book is also a ledger. This is one of the reasons to consider it as a book of final entry. Only one aspect of cash transaction is posted to the ledger account. Since the cash book is the substitute for cash account, no cash account is opened in the ledger. It has two equal sides. One is left hand side, which is called as the debit side, and the other side is right hand side, which is called as credit side. All the cash receipts of the business are recorded on the debit side of cash book, and all payments related items on the credit side of the cash book. The difference between the total of left hand side and right hand side shows cash in hand. The balance of cash book can be verified by accountant by counting actual cash in the cash box. Cash book always shows debit balance. It can never show credit balance. Unlike any other account, cash book is balanced daily.
Advantages: generally, cash transactions are numerous. What is credit transaction? Today will be cash transaction tomorrow. In other words, all credit transactions are finally settled by cash. If, like all other transactions, cash transactions are also recorded primarily in journal, the cash aspect of the transactions will be required to be posted to cash account in the ledger separately, and this becomes time consuming exercise and expensive. This is for the reason companies prefer to record all cash transactions in a separate book named cash book. It is time saving and cheap. Besides this, the cash book renders the following benefits. Number 1 benefit: daily cash receipts and cash payments are easily ascertained. Number 2, Cash in hand at any time can easily be ascertained through cash book balance. Number 3. Any mistake in the book can be easily detected at the time of verification of cash. Number 4. Any defalcation of money can be detected while verifying cash. Number 5. Since cash is verified daily, cash book is always kept up to date. Cash book, a journal or a ledger. From the above discussion, it appears that the cash book is the substitute for cash account. In fact, no separate cash account is opened in the ledger. Cash book serves the purpose of the cash account. In the cash book, entries can be regarded as one aspect of double entry system, whereas the other aspect is posted to the ledger in the concerned account. L.C. Cropper remarked, "Every entry in the cash book makes one half of a double entry. The other half of the double entry appears on the opposite side of some account in the ledger. From this angle, cash book is a ledger." Similarity of cash book with ledger. Form of cash book resembles with ledger. Words to and by are used in the ledger. No separate cash and bank account are required in the ledger. Cash and bank columns of cash book are periodically balanced just like ledger accounts. On the other hand, all cash transactions are primarily recorded in the cash book in an order of the date and thereafter posted to the concerned ledger accounts. Judging from this angle, cash book is a journal. Thus, we see that a cash book is the mixture of journal and ledger. According to Spicer and Pegler, the cash book is actually a ledger account, but owing to the large number of entries made therein, it is kept in a separate book called a cash book, which is used also as a book of prime entry. Similarity of cash book with journal. Number 1. Cash transactions are recorded in cash book at the time of origin. Number 2. Transactions are recorded date-wise. Number 3. Cash book contains ledger folio as in the journal. Number 4. Narration is given for each entry. If we can understand specimen of simple cash book, we will be able to understand all these points. There are the columns which are used in cash book are first column is of date, then particulars, then voucher number, then ledger folio, next amount, then date, particulars, voucher number, ledger folio, and amount again. So this account is divided into two parts, debit part and credit part. Left hand side is debit part and right hand side is credit part. The columns of the cash book are explained as below. First column, date. The date on which transaction is occurred is to be written in this column. In the first line, the year, and in the second line, the name of the month followed by the actual date. Second, particulars. In this column, the name of the opposite account is written. The second aspect of cash transaction, along with the narration of the transactions. Third, LF, that is ledger folio. The page number of the ledger where the concerned or opposite account has been opened is written in this column. This will help to locate the account from the ledger. It may be noted that in ledger account, journal folio is written as reference, while in cash book, ledger folio is written. It is so because cash transactions are not recorded in any journal. Amount. Next column is of amount. The amount of the transaction is recorded in this column. The amount of cash received is recorded on the debit side in the amount column, and the amount of cash paid is recorded on the credit side in the amount column. Next, voucher number or VNO. The voucher number of each item of receipt and payment is also to be written as voucher number is necessary for each item of receipt and payment. Generally, a voucher has a serial number and this number is written in this column. Difference between a cash book and a cash account. Cash book. It is a separate book in which cash transactions are directly recorded. Cash account. It is an account in a ledger in which posting is made from journal. Cash book. It serves the purpose of both journal and ledger. Cash account. It serves the purpose of a ledger only. Cash book. Narration is required. Cash account. Narration is not required. Cash book. A column for ledger folio is provided. Cash account. A column for journal folio is provided. Types of cash book. First, simple cash book. Second, two-column cash book. Third, with cash and discount column. Fourth, with cash and bank column. Fifth, with bank and discount column. Sixth, three-columnar cash book. 7. Petty cash book. Now let us discuss each one of these types in detail. First, one-column cash book or simple cash book. This is the simplest form of cash book and is used in businesses where payments are made and received mostly in cash, and where usually no cash discount is received or given. However, if there are any discount or check transactions, it is recorded in a separate account in the ledger. The ruling of a one-column cash book is like an ordinary cash account. Example: record the following transactions in a single column cash book. Date: April 1, 2014. Cash in hand Rs 6,500. April 3. Purchased goods for cash Rs 685. April 4. Paid to Rishi Rs 95. April 6. Deposited into bank Rs 4,000. April 6. Paid for office stationery Rs 465. April 15. Sold goods for cash Rs 2,500. April 22. Paid salary Rs 400. April 30. Paid into bank Rs 2,500. Now solution. On the debit side of this cash book, we'll write this entry on 1st April 2014. To balance brought down Rs 6,500. And on credit side, April 3, by purchases account Rs 685. Again on credit side, April 4, by Rishi Rs 95. Again on credit side, April 6, by bank account Rs 4,000. Again on April 6, by stationery Rs 465 on credit side. April 22, credit side, by salary account Rs 400. Again credit side, April 30, by bank account Rs 2,500. Now on debit side, April 15, to sales account Rs 2,500. Now this account is having debit balance. So on April 30, we'll write on credit side by balance carried down rupees 855. Now both the debit and credit side of this account are 9,000 now. Two column cash book. This type of cash book has two columns. First cash column and second discount column. Usually cash discount is allowed or received when payment is made. So it is necessary to record this fact at the same place where the cash transaction is recorded. This type is similar to simple cash book, except that one additional column on each side is provided for recording cash discount. As discount is a nominal account, discount allowed, being a loss, is shown on the debit side, and discount received, being a gain, is shown on the credit side. Example: enter the following transactions in a cash book having cash and discount columns. Date: September 1, 2014. Balance in hand rupees 2500. September 5. Purchased furniture for cash rupees 750. September 7. Received from Verma and Company rupees 980. September 7. Discount allowed rupees 20. September 10. Paid to Bihari rupees 290. Discount received rupees 10. September 27. Paid salary rupees 50. September 28. Paid rent rupees 380. Now solution. On debit side, we'll write on date column September 1, 2014. On debit side, we'll make entry to balance brought down on 1st September rupees 2500. On credit side, we'll make entry on September 5, 2014 by purchases account rupees 750. On September 7, on debit side, we'll make entry to Verma and Company rupees 20. On September 10, on credit side, by Bihari. In discount column, we'll write rupees 10, and in cash column, we'll write rupees 290. September 27, credit side, by salary rupees 50. September 28, credit side, by rent rupees 380. September 30, credit side, by balance carried down rupees 1780. So now we'll match the total balances, which will amount to 3250 under cash column and rupees 10 under discount column. On credit side, rupees 20 under discount column on debit side. 3-column cash book. These days, it is difficult to carry on any business without having dealings with the bank. Normally, bulk of its funds is kept by the businesses at a bank in a current account, where frequent withdrawals and deposits are permitted. Bank transactions are numerous than cash transactions. Therefore, it is appropriate as well as convenient that cash book should have an additional column on each side to record monies deposited at bank and payment out of bank. Example: date April 1, 2014. Cash in hand rupees 9000. April 1. Deposited into bank rupees 4000. April 2. Purchased furniture rupees 1000. April 4. Cash purchases. Issued check rupees 2500. April 8. Received check from Gautam on account rupees 3250. April 10. Cash sales received check rupees 1270. April 15. Paid for refreshment rupees 275. April 25. Paid electricity by check rupees 300. April 28. Received check from Suresh and endorsed the same to Verma rupees 400. April 30. Paid advance income tax by check rupees 575. April 30. Deposited into bank balance of cash in excess of rupees 300. Now solution to this problem. On the debit side of this book, we'll write under date column April 1, 2040, and on debit side we'll make an entry on the receipt side to balance brought down, and we'll write rupees 9,000 in cash column. On credit side of this account on April 1, we'll make another entry by bank, and in cash column we'll write rupees 4,000. In ledger folio we'll write C representing contra entry. On April 1 debit side to cash account we'll write C in ledger folio column representing contra entry, and we'll write rupees 4,000 under the column of bank. On April 4 credit side by purchase account we'll write 2,500 under bank column. April 8 on debit side to Gautam we'll write rupees 3,250 under bank column. April 10 debit side we'll write to sales account and rupees 400 under cash column. April 15 on credit side buy refreshment and we'll write rupees 275 under cash column. April 25 buy electricity on the credit side and we'll write 400 rupees under cash column. April 28 on credit side buy drawings we'll write 575 under bank column. Now on debit side April 28 to Suresh rupees 400 under cash column. On debit side April 30 to cash, this is contra entry, so we'll write C in LF column, ledger folio column, and amount 3,425 under bank column. Now on credit side date column April 30, and by bank we'll write C in ledger folio column representing contra entry and amount 3,425. Now we'll make another entry on the credit side on April 30. Buy balance carried down rupees 300 under cash column and rupees 8,570 under bank column. So total amount which will come out under cash and bank columns is 9,400 and 11,945 respectively.
Important points to be remembered while recording transactions in the cash book. All items of cash receipts are entered in the cash column of the receipt side and the cash payment in the payment side. Discount allowed is to be recorded on the debit side and discount received on the credit side of the cash book in the discount columns. When checks are received from customers and deposited on the same date, they are entered in the bank column of the cash book. If they are sent to the bank at a later date, it becomes deposit of money into bank and therefore a contra entry. If checks are received by the business and endorsed to the creditors, they are taken into cash columns as cash receipts and cash payments. two entries are made in the cash book on the same page at the same time. The double entry for each transaction is complete. There will be no more postings of these entries to the ledger, and these contra entries are indicated by a sign C in the folio column.
Drawn from the bank for office use, and when money is taken from office cash and deposited into bank. When money is withdrawn from the bank for office use, it is recorded in cash column on its debit side by writing bank account in the column of particulars, and in bank column of the same cash book, but on its credit side by writing cash account in the column of particulars. When money is taken from office cash and deposited into bank. When cash is deposited into bank, it is recorded in the bank column of the cash book on its debit side by writing cash account in the column of particulars, and in the column of cash of the same cash book but on its credit side by writing bank account in the column of particulars. Cash discount. A cash discount is a deduction from the amount due. It is given to encourage prompt payment of debts. Cash discount, which is given by the trader to its customers, is known as discount allowed. Cash discount is allowed to the customers to encourage prompt payment of their debts. Discount allowed is recorded in the discount column on the debit side of the triple column cash book and posted individually to the credit side of the debtor's account to which they relate. Cash discount received by the trader from its supplier is known as discount received. The trader ends up paying less by the amount of discount received. Discount received is recorded in the discount column of the credit side of the triple column cash book and posted individually to the debit side of the creditor's account to which they relate. Bank loans and overdrafts. When bank gives loan, the amount of loan must be debited to the bank column of the cash book, from where it is posted to the credit side of bank loan account. Whereas an overdraft arrangement is made with the bank, the client is permitted to overdraw his account up to agreed limit as per his requirement. Both represents business liabilities, but loan is long-term liability, whereas overdraft is a short-term liability.
Petty cash book. Petty means small. Every business has to make payments involving smaller amounts. Example, carriage, cartage, postage, telegrams, etc. Such payments, by their very nature, cannot be made by checks. It is usual for the business units to maintain a separate cash book to record small payments only. Such cash book is known as petty cash book. The petty cash book is formal summarization of petty cash expenditures sorted by date. In most cases, the petty cash book is an actual ledger book rather than a computer record. Thus, the book is a part of a manual record keeping system. There are two primary types of entries in the petty cash book, which are a debit to record cash received by the petty cash clerk, usually in a single block of cash at infrequent intervals, and a large number of credits to reflect cash withdrawals from the petty cash fund. These credits can be for such transactions as payments for meals, flowers, office supplies, stamps, and so forth. When the amount of petty cash on hand declines to near zero, as it is caused by withdrawals for various expenditures, the petty cash clerk then obtains additional cash from the cashier and records this cash influx as a new debit. The petty cash clerk also turns in a copy of his or her petty cash book to the journal ledger accountant or cashier, who creates a journal entry to record how the cash in the petty cash drawer was used. The petty cash book is useful control over petty cash expenditures, since it forces the petty cash clerk to formally record all cash inflows and cash outflows. To ensure that this is an effective control, the petty cash book should be reviewed periodically by an internal auditor to see if the net total amount of cash available as per the book matches the actual amount of cash on hand in the petty cash drawer. If not, the petty cash clerk may require additional training. The petty cash book has declined in importance as companies are gradually eliminating all use of petty cash in favor of using company credit cards.
Advantages of Petty Cash Book. Petty Cash Book is a simple form of recording petty expenses. This book is simple to prepare. The chief cashier's precious time and energy is saved by assigning. The main cash book and petty cash book are separated from each other on the basis of nature of items to be recorded therein. The posting from the petty cash book is very easy. Systems of petty cash book. There are two systems on the basis of which cash is given to the petty cashier: ordinary system of petty cash and impressed system of petty cash. Ordinary system of petty cash. In this system, an advance is given to the petty cashier as per his needs. The amount of advance and period of advance may not be fixed one, or a fixed amount may be advanced at regular intervals. This system is very flexible. Under this system, the amount with petty cashier may not necessarily be same in the beginning. Impressed system of petty cash. In this system, an amount estimated as necessary possible in order to meet the expected possible petty expenses for a certain period is fixed, called impressed. It reduces the chances of fraud and misappropriations. It gives the idea to check whether the amount advanced as impressed is sufficient to meet petty expenses.
So, students, let us summarize what we have learned in this module. Cash book is considered as a book of original entry as well as final entry, and cash book serves dual role of a ledger as well as journal. It is the account which keeps track of all cash transactions of business. Cash book always shows debit balance. It can never show credit balance, and it helps to ascertain daily cash receipts and cash payments. The amount of cash received is recorded on the debit side in amount column, and amount of cash paid is recorded on the credit side in the amount column. The date of transaction in cash book is written in two lines. There are different types of cash books, that is simple cash book, two column cash book, three column cash book, and petty cash book. The petty cash book is a formal summarization of petty cash expenditures sorted by date. When checks are received from customer and deposited on the same date, they are entered in the bank column of cash book. If they are sent to the bank at a later date, it becomes deposits of money into bank and therefore a contra entry. A cash discount is a deduction from the amount due, and it is given to encourage prompt payment of debts. Thank you.